Robert sits at his kitchen table in Florida, staring at an envelope from the Social Security Administration. His hands are shaking. He's 71, retired on a fixed income of $3,200 a month. He opens the letter slowly, expecting maybe a cost of living adjustment notice. Instead, what he sees makes his stomach drop. His Medicare Part B premium is going from $174.70 a month to $396.60. That's an increase of $221.90 every single month. Over $2,600 a year. He reads it again, then again. He doesn't understand. He hasn't changed jobs. He hasn't won the lottery. His income went up slightly because he took a small required minimum distribution from his IRA, something the government forced him to do. Now he's being punished for it. Medicare is taking an extra $2,600 out of his Social Security check, and nobody warned him it was coming. Right now, in the last week of December 2025, millions of Americans are opening letters just like Robert's. They're panicking. They're calling their kids, crying. They're wondering how they're going to pay for groceries, prescriptions, utilities when Medicare just decided to take a massive bite out of their fixed income. And the worst part? Most people have no idea this was even possible. They thought Medicare Part B cost $174.70 a month for everyone. They were wrong. And if you're one of the people affected by these income-related monthly adjustment amounts, you could be looking at paying over $600 a month for Medicare Part B in 2026. That's $7,300 a year just for doctor visits and outpatient care. Not hospital stays, not prescriptions, just Part B. I'm recording this on December 22nd, 2025, because you need to know if you're one of the people getting hit with this increase. You need to understand why it's happening. And most importantly, you need to know what you can do about it right now before it's too late. So if you're on Medicare, or you're about to turn 65, or you have parents or grandparents on Medicare, please watch this entire video. What I'm about to explain could save you thousands of dollars. And if you know someone who took money out of their retirement account in 2024, or sold property, or had any kind of income spike, share this with them immediately. They might be getting a letter in the next few days that's going to blindside them. Let me start by explaining what Medicare Part B actually costs, because most people think it's simple. It's not. The standard Medicare Part B premium for 2026 is $185 a month. That's what you see advertised. That's what most people pay. But if your income is above a certain level, you don't pay the standard premium. You pay an income-related monthly adjustment amount called IRMAA. And this is where people get destroyed financially, because IRMAA is based on your income from 2 years ago. So the premiums you're paying in 2026 are based on your 2024 tax return. The tax return you filed in April 2025. Income from 24 months ago. Here's how the brackets work for 2026, and I want you to pay close attention because if you're anywhere near these numbers, you need to take action. If you're an individual and your modified adjusted gross income in 2024 was less than $103,000, you pay the standard premium of $185 a month. But if your income was between $103,000 and $129,000, your premium jumps to $259 a month. That's an extra $74 a month. Almost $900 a year if your income was between $129,000 and $161,000. You're paying $333 a month. An extra $148 monthly, almost $1,800 a year. Between $161,000 and $193,000, you're at $47 a month. Extra $262 monthly, over $3,000 a year. Between $193,000 and $500,000, $581 a month. Extra $396 monthly, over $4,700 a year. And if your income was over $500,000, you're paying $628.90 a month. That's over $7,500 a year just for Medicare Part B. For married couples filing jointly, the brackets are different but just as brutal. Under $206,000, you pay the standard $185. Between $206,000 and $258,000, you jump to $259 a month. Between $258,000 and $22,333. Between $322,000 and $386,000 for 7. Between $386,000 and $750,000 581. Over $750,000 6 2890. These are massive jumps. And remember, this is per person. If you're a married couple and both of you are on Medicare, you're both paying these premiums. So if you had income of $300,000 in 2024, each of you is paying $333 a month. That's $666 a month combined, almost $8,000 a year just for Part B. Now let me explain why this is destroying people financially in 2026. There are several common scenarios that are pushing retirees over these income thresholds, and they have no idea it's coming until the letter arrives. The biggest one is required minimum distributions. If you turned 73 in 2024, you were required by law to start taking money out of your traditional IRA or 401k. You had no choice. The IRS forces you to withdraw a percentage based on your age and account balance. For many people, especially those who saved aggressively for retirement, that RMD can be $30,000, $50,000, even $100,000. That income counts toward your IRMAA calculation. So you take the distribution, pay income tax on it, and then a year later Medicare hits you with a massive premium increase because your income went up. You were punished for following the law. Second scenario, selling a house or property. Let's say you sold your primary residence in 2024. You might have a capital gains exclusion of $250,000 if you're single or $500,000 if you're married. But if your gain was bigger than that, or you sold a second home, rental property, or investment property, that capital gain is added to your income. Someone who sells a rental property and has a $100,000 capital gain could jump from the standard premium to paying $47 a month or more, even though that was a one-time sale and they're back to normal income the next year. But Medicare doesn't care. They look at 2024 income, and they charge you for 2026 based on that spike. Third scenario, Roth conversions. A lot of financial advisors have been telling people to convert traditional IRA money to Roth IRAs while tax rates are relatively low. It's often good long-term advice. But when you do a Roth conversion, that converted amount is added to your taxable income for that year. So if you converted $50,000 from traditional IRA to Roth in 2024, that $50,000 is income. It pushes you into a higher IRMAA bracket, and you're paying extra Medicare premiums for 2 years, 2026 and 2027, because of a smart financial move. Nobody told you that converting your IRA would cost you an extra $2,000 or $3,000 in Medicare premiums. Fourth scenario, working in retirement. More and more people are working part-time in their late 60s and early 70s. Maybe you consult, do freelance work, or have a side business. If that income pushes you over $103,000 combined with your Social Security and pension, you're paying IRMAA. A 68-year-old who takes on a consulting project and makes an extra $30,000 could end up paying an extra $1,500 to $2,000 in Medicare premiums because of it. The income is great, but the hidden Medicare cost eats up a big chunk of it. Fifth scenario, investment income. 2024 was a good year for the stock market. A lot of people sold investments and realized capital gains. Maybe you rebalanced your portfolio, sold some stocks that had big gains, took profits. Those capital gains count as income. Dividend income, interest income from bonds or CDs, all of it counts. If you had a one-time spike in investment income in 2024, you're about to get hammered with higher Medicare premiums in 2026. And here's what makes this even more brutal. These premium increases are automatic. Medicare doesn't ask you if you can afford it. They don't send you a warning 6 months in advance. They just deduct the higher amount from your Social Security check starting January 1st. So if you're getting $1,600 a month in Social Security and your Part B premium goes from $174.70 to $396.60, your net deposit drops from $1,425.30 to $1,203.40. You just lost $222 a month in cash flow overnight. If you have automatic payments set up for bills, you might start bouncing payments because the money isn't there anymore. So what can you do? This is the critical part. If you got a letter saying your Medicare Part B premium is going up because of IRMAA, you have the right to appeal. and in certain situations, you can get the increase reduced or eliminated. The key is something called a life-changing event. Medicare allows you to request a redetermination of your IRMAA if you experienced a life-changing event that reduced your income. The qualifying events are very specific: marriage, divorce, death of a spouse, work stoppage, work reduction, loss of income-producing property, loss of pension income, and employer settlement payment. If any of these happen to you after the tax year they're using for your premium calculation, you can file an appeal. Here's how this works in practice. Let's say your 2024 income was $150,000 because you were still working part-time, but you retired in December 2024 and your income for 2025 and going forward is only $70,000 from Social Security and a small pension. That's a work stoppage. You can file Form SSA 44, the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form, and provide proof that your income dropped. If approved, they'll recalculate your premium based on your current lower income instead of your 2024 income. You could go from paying $333 a month back down to the standard $185. That saves you almost $1,800 a year. Another example, you sold a rental property in 2024 and had a big capital gain, but you don't own that property anymore and you won't have that income again. That's loss of income-producing property. You can file the SSA 44 form, show that you sold the property, prove that your ongoing income is lower, and request a reduction. Or, let's say your spouse passed away in 2025. Your income as a married couple in 2024 was high, but now you're single and your income is cut in. Half because you lost their Social Security or pension. That's death of a spouse. You can appeal and have your premium recalculated based on your new filing status and income. The key is documentation. You need to prove the life-changing event happened and that your income is lower now. That means providing tax returns, pay stubs showing you stopped working, death certificates, divorce decrees, pension statements, property sale documents, whatever applies to your situation. The form is available on the Social Security Administration website. You can download it, fill it out, attach your documentation, and mail it in. Or you can go to your local Social Security office and file in person. I recommend in person if possible, because you can get a receipt showing you filed, and you can ask questions if you're not sure what documents to include. Now, if you don't qualify for a life-changing event appeal, you're stuck paying the higher premium for 2026. But here's what you can do to avoid this problem in 2027 and beyond. You need to manage your income strategically. If you know you're close to an IRMAA threshold, be very careful about moves that push you over. Let's say you're at $100,000 in income, and you're thinking about taking an extra $10,000 out of your IRA. That $10,000 could push you into the next bracket and cost you an extra $900 in Medicare premiums. You're only netting about $7,500 after taxes, and then you lose $900 to Medicare. Was it worth it? Probably not. Maybe you wait until next year, or you take $5,000 this year and $5,000 next year to stay under the threshold. If you're planning a Roth conversion, talk to your financial advisor or tax preparer about the IRMAA impact. Run the numbers. Maybe convert a smaller amount over 2 years instead of one big conversion in 1 year. If you're selling property, consider the timing. If you're already over the threshold this year, maybe it doesn't matter. But if you're close, maybe you wait until next year to sell so you don't spike your income all in 1 year. If you're working in retirement, be strategic about how much you earn. If you're at $95,000 and you're thinking about taking on a project that pays $20,000, realize that you might hit the next IRMAA bracket. Maybe you negotiate to spread the income over 2 years, or you work through an S-Corp or LLC and manage distributions more carefully. Another strategy is managing investment income. If you know you're close to a threshold, be careful about realizing capital gains. Maybe you hold investments a little longer, or you harvest losses to offset gains, or you use tax loss harvesting strategies to keep your adjusted gross income down. Every dollar matters when you're near a cliff, and the IRMAA brackets are cliffs. Going $1 over the threshold can cost you hundreds of dollars in premiums. So if you're at $102,900 and you're thinking about selling a stock with a $5,000 gain, realize that if you do, your Medicare premium goes from $185 a month to $259 a month for the entire year. That's almost $900 in extra premiums because of $1 over the limit. Here's another thing people don't realize. If you're married filing jointly and one of you is on Medicare and the other isn't yet, you still get hit with IRMAA if your combined income is over the threshold. So if you're 70 and on Medicare and your spouse is 62 and still working, their income counts toward your IRMAA calculation even though they're not on Medicare yet. This catches a lot of couples by surprise. They think Medicare only looks at the Medicare recipient's income. Wrong. If you're married filing jointly, they look at the total joint income, so you need to plan for that. Maybe your working spouse retires before you hit Medicare age. Maybe. You adjust withholding or estimated tax payments to account for the higher Medicare costs. Maybe you file separately, though that often creates other tax problems, so you need to run the numbers carefully with a tax professional. Let's talk about the numbers one more time because I want you to understand the financial impact. If you're single and your income goes from $102,000 to $104,000, a $2,000 increase, your Medicare premium goes from $185 a month to $259 a month. That's an extra $74 a month, $888 a year. So that extra $2,000 in income costs you $888 in Medicare premiums, and after federal tax at 22%, you only netted about 15–60% from the income. Your net gain is $672. Was it worth it? Maybe, but you need to know the trade-off. If your income goes from $128,000 to $130,000, you cross another cliff. Now you're paying $333 a month instead of $259. That's an extra $74 a month on top of the previous increase. You're paying almost $1,800 more a year than the standard premium because of $31,000 of income over the base threshold. And here's the really painful part. Let's say you had a one-time income spike in 2024. You sold a property, took a big RMD, had a Roth conversion, whatever. Your income was $150,000 in 2024, but it dropped back down to $80,000 in 2025 and will stay at $80,000 going forward. You're going to pay the higher IRMAA premium for 2026 and 2027. 2 full years of higher premiums because of 1 year of higher income. If you don't qualify for a life-changing event, you're just stuck. You'll pay an extra $3,000 or more over 2 years because of income from a single year that's long gone. This is why I'm making this video right now, in late December 2025. If you had a high-income year in 2024, your letter is coming or might already be in your mailbox. You need to open it, read it, and decide immediately if you qualify for an appeal. The deadline to file an appeal is within 60 days of the date on the letter. If your letter is dated December 15th and you don't file your appeal by mid-February, you lose your right to challenge it for 2026. You'll be stuck paying the higher amount for the entire year. So don't wait. Don't assume it's a mistake. Don't ignore it, hoping it goes away. Act fast. And if you haven't gotten a letter yet but you had high income in 2024, go to your My Social Security account right now. Log in at ssa.gov. Check your Medicare premium information. See what they're charging you for 2026. If it's higher than $185, you're paying IRMAA. Figure out why. Look at your 2024 tax return. What was your modified adjusted gross income? Which bracket did you fall into? Does it match what Medicare is charging you? If not, that's another reason to file an appeal. Sometimes Medicare gets it wrong. They use IRS data, but sometimes the data is incorrect or they misread your filing status. If you were married filing jointly but they calculated your premium as if you were single, your brackets are wrong and you're overpaying. You need to catch that and fix it. Now let's talk about scams, because whenever there's confusion about Medicare, the scammers come out. You're going to get phone calls claiming to be from Medicare or Social Security saying there's a problem with your Part B premium and you need to verify your information immediately.